Okay, everybody, welcome. Thank you for joining. It's noon here in the Baltics, Monday, January 26th. 11 a.m. Paris, 10 a.m. London. Hope everybody joining is kicking off to a good week. I'm making my video feed extra compact today so we can see these new charts. I haven't quite taken the time to really sort of maximize all the ways we can look at this, but absolutely nutty days, and I want to just take some time here to show you how the global monetary situation actually looks between, let's say, democracy and autocracy, and also how the global economic or GDP situation looks. All right. So, as I mentioned, I'm going to have access for you guys to charts soon. It's going to look something like this. There's going to be a lot more detail, but I know a lot of people have been asking to see them. All right, so this is one of my headline indicators. It's a global monetary base, but I'm only doing these entities. All right, it's a little bit different than I've shown before. So this is from the perspective of security, as you guys know, is important to me. So we have here in red, basically the main autocracies. I think you can add North Korea, but I would say these are the main autocracies that are at least certainly not friendly. Maybe in China's case, not necessarily unfriendly, but it is anarchy in the global world order. But at least for now, we have countries and groups of countries that respect the rule of law, private property, and those that don't. Again, I know you can own property in China, but it's a totally different thing than owning property in the West. So what you have is basically, this breakdown of Iran, Russia, China, and then, as I'm showing all the hot spots or potential hot spots, Ukraine, Taiwan, Korea, Australia, Japan, basically European NATO, although Canada's in this as well, and the United States. Okay? So my global monetary base will be actually more than this. Okay, you got all of Africa, all of Latin America, other parts of Asia. But again, these are the nations that at least make the news from a global security standpoint. You see what happened in COVID? Globally, we went over 30 trillion. This is not there. I need to get a total of what you see, but it's 27.5 trillion, something like that. All right, with these countries. And then we've been down. And there's a combination of central banks actually cutting their money supply because of all the inflation that was produced post 2020, and the dollar holding its value, relatively speaking. That might change, especially with this news that the U.S. may support the BOJ. We'll see. But in any event, this is how it looks. All right. Interesting, right? So I'll show you a little bit behind the curtain of what, this goes back all the way to 1900, but the data is really sparse. It's like it's not even the U.S. I only have the Federal Reserve from, they opened their doors in 1914. I think the data that I have starts in 1917. Very end of 1917, 1918. This is basically like Norway, Denmark, the UK. Most of the data doesn't really get going until 1960 or 1970, which is why I've always shown it from 1970 is a good date anyway, because that's when the gold standard fully went kaput. But it's interesting, right? If you look at 1970, this is the money supply that is economically comparable with Bitcoin, all right? And we're under 200 billion easy in 1970. Japan comes in here with data from 1970. Under 200 billion. Under 150 billion. And the long and short, I'm not going to show this on exponential yet, or on log scale. It's still linear scale, but this is the effect of compound growth. It looks mad over 50 years, but this is what it was. It's about 1% a month, 13% per year compounded. 1% a month is not 12% a year. It's closer to 13% a year due to the power of compounding. But we can clearly see, even before the GFC, things were taking off, but way different after the GFC. Okay, so Europe, Canada had 1.7 trillion monetary base, the US under $1 trillion, Japan under $1 trillion, China already huge at this point, 1.7 trillion. The rest, a couple hundred billion or less in the case of really just Russia and the other currencies down the line. You see here is QE1, QE2, QE3. All right. And then interestingly, right, we can take off the big Western countries. Let's even take off China. All right, mostly what the US was doing here stopped. And a lot of the larger Western nations, they stopped printing from 2014. And as you know, Bitcoin went up in 2017, which still tells me that the power curve, the power law, is way more important than money supply in the short term for now. All right, everything went up here, including Bitcoin. It's true. But again, look, they stayed stagnant here. Now, if we put the others back on, you can make the argument that, yeah, they generally always, money goes up, Bitcoin goes up. Okay, but even from here, in 2018, everybody was going down. And this was indeed when Bitcoin was going down. That's true. Okay. And so I think globally, it's helpful to look at. Again, this isn't total globe, but these are main countries. I just want to sort of democracy versus autocracy. But then again, keep in mind, Bitcoin went up here when the value of money was going down. So there's still no hard and fixed rule here, but I think it's interesting. Now, I know in the Bitcoin space, everybody is a little bit behind the curtain here. You see, there still existed a monetary base. It would be harder to calculate, but there's no central bank monetary base in the United States. So this is only central bank monetary basis. But you see how the data is just really sparse. Doesn't really work as far as comparison until about here. So we'll zoom in. Yeah, that's not what I wanted. From 1960, 1970. So this is a factor of 1 now, just taking all the data, comparing it. I know in the Bitcoin space, we'd like to say that everybody else is a scam. Bitcoin is the only thing that's not a scam. If you guys, I think a lot of Europeans would agree with me. There's more to life than that, especially when countries want to go to war. While the US was dealing with all of its issues after 9/11, some of which many people would disagree with, say going into Iraq, myself included, China was growing. All right, China was really started to boom around the 2000s. And you notice how they get a more share of the money supply. Then notice how that changes a lot after the global financial crisis. And here I actually want to focus on Russia. Watch Russia. Russia here was nearly 5% of the pie. Everybody consuming oil and gas. Schroeder, the Schroederization of Europe. And then they were also not immune to the value of their assets when the global financial crisis hit. Okay, we can go back to the gross picture, of course, and analyze it all day long, but I'm more interested in this to show you the share. All right, so notice here that Russia was up to nearly 5%. And they bottomed out at like 1.8 after the GFC. Then they kind of went sideways, and even Russia shrank more and more because of Putin's absurdity with his imperialist ambitions. You see right here, he went into Crimea, right here. They get smaller as a global share of central bank-based money. China's also struggling. All right, and then especially with the silly season of COVID, people realize it's actually not the greatest place to perhaps invest in autocratic systems. I'm going to jump around a little bit, but of course I say a lot of this. This is on the back of this news, if you guys saw. All right. Number 2 in command, and there have been many. You can find like a general bingo, like you can with Russian oil refining and production bingo that's been taken out by Ukraine. It's the same. It's happening now. Generally, I think these are good things. All right? This is what corruption, autocracy, tyranny does. You can't trust anybody at the top. And whether or not this guy leaked nuclear secrets to the US, I have no idea. That was some of the rumors. There are economic consequences here. And okay, this is the total. So as a percentage, right? Interesting that China was actually at its weakest right here. Okay. And this was indeed after a huge round of stimulus, lots of money printing, both in the US and Europe. Look at how NATO, non-US, right, was at 25% before COVID. And they got all the way up to 32%. That's coming down a little bit. Actually, decent amount, back to 28%. But again, I think it's helpful, right? If you're a Bitcoiner, I want freedom for all people in the world. But rather than just sort of complain about everything in the Western world, and there's a lot of problems, as good as Bitcoin is, I'm perfectly fine making the general projection that, you know, a year from now, 2 years from now, there's still going to be fiat currencies. Still got to deal with this. There's going to be autocracy. There's going to be democracy. I would say it would be better if democracies, the rule of law, private property, independent judiciaries, independent anti-corruption agencies continue to thrive. And autocracies, whether they're communist-based, like in China, or just sort of mafia-style corrupt-based, like in Russia, or radical Islamist-based, like in Iran, that is more of the battle that I'm personally interested in. You may disagree. Bitcoin is going to help everybody. But 1-2 years from now, this chart is not going to be, I mean, it may veer off in weird directions we don't quite expect. Hopefully where the red gets smaller and more freedom and openness comes to China and Russia and Iran. But this is where, again, I would still take comfort in Bitcoin, but this is not going, I mean, as nice as it might seem, this chart's not going to go orange tomorrow, where Bitcoin is going to replace all monetary central bank money. And democracies or autocracies, let's say, lose their power. So it's a battle. It's a battle. I definitely think Bitcoin is going to help. But I think this is insightful. And these are the kind of charts that took me a long time to get to here, by the way, you know, because we got different groups here. You got NATO, non-US, you got different entities that don't always exist from the same place, let's say, when you got to find the data. And look at this. I mean, Ukraine takes up 0.1% of the pie. Russia's 10x bigger, at least. And Ukrainian people are heroically holding them at bay. Iran is actually quite a bit bigger. By the way, this is I should say, with Iran in particular, this is a black market. This is not a black market real rate. So this is a central bank rate, so it's even higher than it really is because it's way devalued. There's a lot of different ways to slice and dice this, but that's what it is. All of the percentages, though, it's true, are like everything in this chart is analogous to Bitcoin. Okay? So when central banks print money, it will eventually affect Bitcoin. Maybe not all at the same time. Maybe it'll be quite staggered. Like we said, Bitcoin has grown the past 3 years, 2.5 years, right? And this has gone down. Bitcoin grew exactly at the point when this shot up. And actually, globally, it's true. Bitcoin grew all the way to here and then gone down. It's true. But as if you take away, again, a lot of the sort of, well, if you just take away the East, let's say, Bitcoin did not. Meaning, what am I trying to show here? A little bit it did grow still, but you know, the top of Bitcoin in 2017, yeah, it did align up. But I've noticed the United States was not printing money at the time. But anyway, it's good to look globally. It's good to look at all this stuff, but I still don't think you're going to get any hot tips from looking at the money supply. It's better to look at the power curve. Good morning, Leon. Good morning. I love that. I love the picture and the name. Thank you for that. It does take a long time. You can tell you this is like 10 years in the making, frankly, to get all this. And AI helps, by the way. It's better to get some help to some of the coding, and I hope to bring it to you guys very soon so you can have all the fun looking into these different levels of analysis. My real estate friend, correct? If I recall. But the picture is great. I want to say thumbnail, but I guess it's not right. Okay, so that's where we are here. Now let's look at GDP. All right, it's got 2025, but it's not all complete, so it's not exactly good to look at. But let's look, say here. All right, same deal. Not as fine of an analysis. The analysis before was every month. This is only every year. I'm just taking World Bank data. The economy itself is over 100 trillion, maybe even over 110 trillion probably. But these countries and NATO itself, over 80 trillion of GDP in totality. And then again, let's look, I think this is helpful. So this is a little bit different than the money supply pictures. The money supply picture bottomed out earlier for China. But with GDP there, still cracking along, but the pace is slower than it was in the 2000s, right? And as you know, I'm very worried about the hellscape. Russia continuing to encroach on free countries. So 4% here in global GDP. Which actually grew with their oil and gas production more than I would thought post-financial crisis. You see it went down from 3.3 to 2.5% in 2009. But now they're still, oops, sorry, that's wrong, 2.6%, 2.6%. So again, I know China is the manufacturing hub of the world. Germany used to be, in fact. Maybe they'll come back. But I would look at these things more positive than negative. Of course, the biggest worry for me is down here, the United States, how free they're gonna stay. But generally, you know, markets are gonna do better over the long run. Free societies are gonna do better for the long run against autocratic, communist, Islamo-fascist regimes. Ah, okay. So I was thinking of someone else then. Excellent. It's great to hear. And likewise. Let me even zoom in, say here. Yeah. My zoom gets annoying still. Let's go here. Because even the Russian data is bad before the Soviet Union fell, even though it's like they had fake exchange rates, fake reports, all the rest. So I'm not even including the Soviet Union. So this is really more accurate way to look at it. This zoom, I mean. We fell below 80%. These countries, say the Democratic West, liberal Democratic West, which I don't think is a bad word at all. We fell below 80% back in 2012. And it seems that the worst was in 2022. But now slightly better. Still in 2024. So again, not to get too much on a soapbox, but how many times have you heard in the Bitcoin space that the world's going to end, everything sucks, buy Bitcoin? I actually agree with the third premise, but it's going to be a battle. It's going to be a battle. Freedom is not, democracy is not a bad word. Free society is not a bad thing. And news like this actually very much comforts me. Very, very much. Not that I don't want the best for the people of China, but and I've said this a lot, I really, just as the Soviet Union fell and nobody suspected it, I do think this will happen for China. This could happen 30 years from now. But I do think, look, freedom's better than autocracy. It's better than communism. So anyway, just a little taste there. They're not quite 30% of the pie here. As you see, more 25, 26%, basically. And I would say it'd be better if that shrunk. And hopefully the United States can stay free as well down here. All right. Back to the power law. Rough weekend, right? But still, it's the price that I have in the model not too long ago. I don't know if we've pumped. It's probably pretty close. A little bit higher, actually. 87.8. Wait. Maybe I got that, actually. 80, yeah. Down from when I pulled it in. Still. You see right there, the 40th percentile, 82,000. The 50th, which is the median, 97,000. So, still hanging on. I'm not too worried. Our gold friends are loving life. All right, here's a long-term trend of gold. The trend measures itself from December. The price is today, though. So, pretty incredible. $5,000 gold. I'm happy for them. Happy for you if you have some gold. But I want to be clear here. Like, if you think about the 100th percentile that happened with Bitcoin, same type of analysis. All right, it's very rare. Very rare that it occurs. In Bitcoin's case, it means 7.8x the trend is the 100th percentile. It happened like twice, basically. Didn't happen in 2017. Extremely hard to do, extremely rare. Might not even happen again because Bitcoin, the power curve gets, more gradual over time. That doesn't happen exponentially. Exponentially is constant, so it can be wild. So I could see it happening more with exponential, but still you see the levels. All right, we hit it here. And we actually, I think, yeah, I changed this a little bit. This is slightly a hindsight number now. It's still going to show the max. Of course, this was a huge move back in the 70s, but the record was set here. It was here, which was 2.4x, 2.4x the trend at the time, and we are setting a new record now. So next month it's going to be a record, presumably, if we stay above $5,000 gold. That's 2.5x the trend. It will be a record. But is it going to go to 10,000, 20,000? Seems highly unlikely to me. Not that I'm not happy for gold bugs. Here's the trend it's on right now in the last 2 years. 42% per year, 43% per year. And even here on this trend, it's reaching highs. All right, this is a weekly chart. Sorry. So how long will this crazy trend last? Maybe in $10,000 gold into 2028, but $20,000 gold into 2030. This is when you have to start going back to this chart. And you see how rare it is to get above the long-term trend, which is 5.2, 5.3% per year. Hi, Stuart. You mean this one? And it's true. That's true. I mean, World War II is not in here. Obviously, World War One, Vietnam War ended right there. So that's true. However, here's what I'd say to that, because I understand it, but here's what I'd say. This was still massive. All right, every gold bug in the world loved life. I know you know the history. I read a lot of the history of what was happening here. Like, if you were a gold bug right here, you thought you would have won. Like, it's completely taken over the world, and it's not what happened. And I think we all know Bitcoin's is a superior asset. So I do think this matters. I do think, even though the pegged price of gold is totally different stuff, different monetary world, I do think this long trend really, really matters. It's very possible it can be pulled up to 5, 6, 7, 8% growth, which has been way underperforming over the last 50 years. Because remember, the slope of this curve is 5.3% max, 5.2, if I recall. So I think it can be revalued to 7, 8% per year, but I don't think it can be revalued to 43% per year and keep up. Peter Schiff would like it, but I don't see it happening. I will try. Yeah, I don't have it. I mean, it's going to be worse short term than these. This is the same trajectory of AI, by the way. I need to get the market caps of AI back up. Yeah, I agree. And I totally, this is again why I don't think I've called an end to the cycle. It's possible that the cycle is different. Like, maybe we go a little bit longer this year, whatever, but this could be it. It just could have been a really, really weak cycle. And then, of course, that would imply maybe weaker drops. Like, maybe we only fall to, right, like somewhere here where we are, or here. Totally possible. I would agree with your statement. Yeah, so look at this. Yes. So now we can put them together, Bitcoin and gold. This is the most interesting charts to watch. All right. So now we have this fairly easy math, right? We have $5,000 gold. We have a $90,000 Bitcoin. There's your price. 18.69. I mean, you could do it any way you want, right? You could double the price of gold, keep Bitcoin the same. We'll get to 9 ounces. Or, take off 30% the price of Bitcoin, add 40% the price of gold, whatever. Yeah, you'll get close to that number. 10, but here again, I think we should take comfort in the statistics here. Like, this would be so rare to get even to 10 ounces today, right? Like, we are under a 10th percentile multiple, and to get to the extreme, it's a 90% drawdown Bitcoin gold from this line. And I have a hard time seeing it. I really do. Even as crazy as the geopolitical stuff is. And it's funny, I don't watch Bloomberg too much anymore, but I was watching the news this morning, and I think his name is Guy Johnson, the main London guy. He was like, whether you want to or not, you have a lot of these gains, you make multiples, you need to pair them off at some point. But if things remain so uncertain, you have, the US dollar getting weaker, the US supporting the yen, where might you go? And he's like putting the question just right there for any Bitcoiner. And of course, nobody says Bitcoin. But he asked the question, like, where could you go? What asset could you go to get out of this madness? So I think we're poised. Yeah, there's nothing that tells me, right, we're poised for a turnaround right now. But I would say just keep powder dry to buy. If it goes down, be happy if it goes up. Because even here, when it was 9 ounces of gold back in 2022, right? The worst it had ever done, which is that 0.1x, was 4 ounces. And that number right now is already to 8. So I just don't see it. I don't see, even with as good a gold trade as is happening right now, I do not see gold bugs getting much cheaper Bitcoin prices. Probably. I'll try to do it. I don't have it right offhand. You just have to pick a date. For example, I mean, we could look at here. We could draw it from here and see. From $16,000 gold still to 90, it's still probably 20-30% per year. Right. So that's true. Once in every 400-year event. Yeah. Yeah. That's I should. It's fair to bring it up. We had on Tyler Jenks. I think he passed away in the old days of my podcast with Fernando, and he said, it's totally possible that if you're a Bitcoin holder and the U.S. wants to hold on it to its dollar hegemony, it starts to back the dollar with Bitcoin. It's totally possible they could, make you an offer you can't refuse as a Bitcoiner, which gives you multiples higher in dollar terms, more. And obviously that could happen, and that still points to, hold your Bitcoin. I would be very scared to sell Bitcoin at this point. Bottom line, not financial advice, but I would be very scared. All the geopolitical uncertainty, even with gold very high. Here's my base case is that the 4-year cycles are not actually over, but because this was a muted up cycle, it'll be a muted down cycle. And there's also the possibility of a 1 in 400-year event, a revaluation, some sort of a new Bretton Woods. We know the president of the U.S. likes Bitcoin, so in these revaluation events, you want to be holding the physical. You don't want to be holding an IOU for it. What I want to show you. This is the monetary base one again. The split was here of these countries, right? 3 autocracies, the rest democracies. I know it's a loose group, but the split right here was 40-60. Right? Right before the GFC. Went back to 40-60 here in 2011. Eurozone crisis. You see Eurozone crisis right there. The Greeks not paying, which they still can't repay, but it's funny how that's not like a story anymore. And then interestingly, people went to euros here. Euro bonds have held. And this is a positive indicator, I'd say. You have Australia, Japan, Korea, Taiwan, Ukraine. My worry is the United States here, as far as keeping its share of this pie. Thank you, Satoto. Good morning. But yeah, I mean, this is it, by the way. Back to this one. This is it. So, like, okay, this isn't the full world, but this is like big hegemony, big hegemons. You know, Bitcoin is going to compete with all this. Gold, incredibly, is the same value as this right now. With its, you know, more. It's even more. It's close to 30 trillion now. It's unbelievable. 30 trillion in physical. That's another thing that I just think it works for Bitcoin, right? But it doesn't work for gold because gold is such a more mature asset. We know the problems in it from World War II. You can't move it around. You see what's happening with Iran. They're shipping their gold to Russia. Bitcoin is a much more fungible, distributed global asset. This has got to be. I mean, I want to say these things like this is peak gold, but I don't know that. You could be right, Stuart. It's a once in a 400-year event. Maybe something happens with a new gold, new Bitcoin basket, but let me take this off so you see what I'm focusing on here. So this set, the total's a little over 26 trillion. This is only 24. Shows you the difference is the rest of the world. 24, yeah, probably 23 and change even. But even this set of money is less than the value of gold, which is kind of wild. Peter Schiff's very happy. I'm so bullish Bitcoin. It's hard to express. I mean, you know, just to repeat, this is probably the multiple overpower trend is probably very hard to hit in a power curve because it gets, it gets the volatility declines, it gets less volatile over time, a power curve. So that's why I do think like getting 7.8x the power curve, getting to 1,000,000 right now, very difficult. But with gold, with gold, it's a completely different scale, totally possible. And here, as you see it, this is the multiple, 2.4x the trend, which really looks more like this over time. That's it. That's the only time gold has been as high as it has been. So unless it's Stewart's once in a 400-year event, it just doesn't statistically have the possibility to go that high. You just get into very, very rare things. Yeah, one in a 400-year event could make this. I don't know. Maybe they repeg at $30,000 and then they have Bitcoin as well. In which case, it'd be good to own gold and Bitcoin. But I don't see it. Cure for high prices is high prices. I was seeing someone, how I was telling you guys about how gold bugs are now having a fun day with mines that could potentially earn more yield because of the higher price where they weren't profitable before, right, at lower prices. I saw Eric Sprott made like a few billion, major Canadian resource investor, like made like a few billion on some mine investment that he did a couple years, and they're not even doing anything. It's just the simple rise in the price gives you billions, but that does not mean that turns into gold coming out of the ground. If I were him, I would just liquidate it. But again, I'm not him, and he's got more powder than I do anyway, so I guess I shouldn't comment too much on those things. Yeah. That's where I'm at. I mean, there's always that 1 in 400-year caveat. But I think if you see what's happening in China, you see what's happening in Russia, the free world is holding. And I hope they hold. I really hope for everybody's sake that they hold. It's difficult, though. It's now 800,000 without electricity. Thousands without heat or water. If you follow Jay in Kiev, he had a very interesting. This bomb didn't explode, I guess, but it just stuck in this lady's apartment in Kharkiv, and she took a picture of it. As far as I understand, I don't have the picture, but she took a picture of it, and the parts were like brand new, meaning way different. That's actually a good thing because Russia has been using up all of their Soviet stock. They've completely expended their Soviet stockpile, their parts, everything on Ukraine. And again, just an unbelievable sacrifice, which these people have taken on for the world. But this sort of advantage of being this superpower, this nuclear hegemon is just not even in the case for Russia anymore. And you see, even when they did in the 90s, like, okay, so you got to your reserves, i.e., your money, is 4% of the pie. They haven't been there since. 1.5% of the pie. All these things are good things, in my view. Yes, precisely. The cure for high prices is high prices, unless you're Bitcoin and you have the only fixed supply in the universe. Our American friends are. If our American friends don't have an election in the fall, and they really devolve into some sort of a civil war thing, that would be, I'd say, very bad. Very sad. We're just going to have to see if rational discourse can win out. That was actually it for this Monday that I had. Unless you guys want to see something else. Oh, I'll show you the update on the network revenue, because this is the one thing, as I've said many times, that I think could be the sign that we are actually out of the 4-year cycle. And as far as I can tell, it's the only thing that shows it. But it's hard to judge because there's layer 2s, layer 3s. But as I've showed you, is this trailing 12. If Bitcoin just trades around in ETFs, yeah, you will have less miner revenue because there's less transactions. But that's not how it works anyway, right? Right now, I mean, it's 90. Let me show you the share. It's 100% new coins. It's not transaction fees. So this is why this, to me, is actually a bullish sign that this could just be a blip and we go up. Because I just think it's very weird that we'd top at the same level as last time. Liberation Day was such a funny thing, was it not? I mean, just so I think you can argue. Let's see daily. Okay, so I think you can argue that since we have layer 2, layer 3, to varying degrees, but for sure we have Bitcoin trading on ETFs, that mining fees are lower. But that really was not what drove the main revenue anyway. I mean, it is true that it shows like potential short-term tops, or whatever you want to call it, cyclical tops, when there's a little bit of white in this picture, i.e., transaction fees. But in any event, most of the revenue for miners still to this day is 99% is the block reward, is the inflation, if you want to use that word. It's not really the issuance, since we know that Bitcoin doesn't inflate past 21 million. So that's why I still see this as a bullish sign. It's just cyclically very different than what we've seen before. This to me is the most cyclically weird indicator. Which maybe means it's not the top. Maybe it means the 4-year cycle is broken and this goes higher. I think it's good the US president decided not to invade Greenland. That was a good move. Things could have looked much worse for the free world if that happened. Uh, Not enough, Stuart. I keep forgetting. I know people. Silver's like at some insane level now, isn't it? I need to put it on there. What's the price? $109. Oh my God. $109. Yeah, so that's gonna look more insane. I'll do it tomorrow. I promise. Tomorrow I'll have it. Um, I mean, if you did this, it would be. There's no question. It's like in nosebleed territory for silver. That's insane. Yeah. We can look at the value on my site. Again, should all be fixed. The UI issues of ounces. But yeah, we're over 3x Bitcoin now is silver value. Just wild. Gold at 30 trillion. Um, this should be pretty current. Why didn't I put this in dollars? So 6, yeah, 6 trillion is in central banks now. 6 trillion. This is another interesting thing. I'll try to get this up tomorrow as well, but 6 trillion is in central banks in gold. And central bank money is actually fairly low. I mean, compared to 5 years ago, right? So central bank money is, let's say, 26 trillion. Gold is 6 of that. That's a high percentage compared to what it used to be. I'm not saying I know the right percentage. I'm just saying that's pretty high. What's the exact? 23. 23% is very high. You know, it got down to like 6, 7% in the 2000s. You know, another strategy is to stay on the train, right? So this is where I just have to drop off. Like I can't provide, nor do I really know about financial advice. But the fact that gold is in the world more than all central bank money, and central banks themselves now hold 25% gold, 23%. It's wild. It is wild. Hmm. Right? I mean, before Bitcoin, I was, tracking gold, as I'm sure a lot of Bitcoiners were gold bugs, and we always thought it would have been gold that changed the monetary order, and it for now is. But the tear is just severe. I just have to keep tracking this every day and tell you. I mean, at the end of this month, it's going to be 2.5x the trend, right? So it gets to 2.5. Maybe in February it gets to 2.7. But as that starts getting up 3, 4, like this, it's never been seen before. And then you get back into that same, the cure for high prices is high prices and supply demand equilibrium. At least that's how I see it. The 1 in 400 year possibility is still interesting, Stuart. It's black swans happen. I'm more hoping for this, though. Let's mitigate the, support of Russia by China. Maybe China's going to continue to eat themselves. We're seeing true paranoia now from Xi. I guess Iran's technically not over, right? I mean, haven't even talked about that in a while. It's terrible, absolutely horrible, but the U.S. is bringing more metal into the area. I don't know. They're not strong. Even together, they're not strong. Russia is out of money. Iran never really had it. It's taking it to Russia, which is the dumbest idea you could do. And, Europeans are weaning themselves off of Russian oil, which I do think is a good thing. Agreed. But where's that peak? I don't know. I would say I'm more optimistic if you look at something like this and you see, global GDP share, global money share. I can try to do global gold in central bank share, even though that's really, one could argue less of a factor than the fiat value itself, which is this. It will take time, though. You're right. Years minimum. I think that's it for today, guys. Whatever your goal in life, stay calm, hodl. And let's try to remember that the crazy authoritarian tyrants are actually, they don't have that much money. China, yes. The rest, no. The rest, no. All right. I'm going to leave it there. Thank you guys for tuning in. As always, I will see you tomorrow. I'll try to get some more silver. It's about time to see the silver update. So take care, everybody.